hey, sometimes those things happen. Anyway, we're going to dive into the top stock trades today. I think you guys are going to love this one, what's happening within the markets, but also the impact it's going to have within Bitcoin and Ethereum primarily, because these will be some flight assets that I think will start to play into this. And this is going to be a good one. I think you guys are going to like it. We have Mr. Soloway coming back on the show, so it's going to be a hot take for sure. My name is Paul Barron. Welcome back into Tech Path. Joining me, of course, Mr. Gareth Soloway, coming in from In the Money Stocks. Great to have you back.
Great to be back.
Excellent. Gareth, so we have a lot happening in the market right now. Obviously, CPI right here on the verge of coming in. Investors now are saying, hey, let's price it. And I've got two different tweets going different ways here, and I want to get your take on this. Investors now pricing in no more rate hikes. US CPI this week should be a little bit of a determining factor for the Fed to pause, maybe do a reversal. We'll see. But if you jump over to Zero Hedge, they're jumping in with Goldman Sachs and Barclays saying, wait a minute, we think the Fed cuts, there's not going to be any this year. So what are your thoughts right now on CPI and whether or not the Fed does start to look at some alternatives, at least for a reversal?
Yeah, so I do think that the CPI number tomorrow comes in a decent reduction. But again, I don't think it even gets us near the goalpost of where the Fed can ultimately start cutting rates. So I'm in the camp with Zero Hedge. I just don't see cuts this year. I think, again, the risk that you're seeing Jerome Powell face is that essentially if he cuts too fast, he's going to have a whole new can of worms with inflation roaring back. And so he's even said that before, right, with Paul Volcker. Listen, we can't repeat the mistakes of past, so I'm going to be hard-edged. So I actually expect them to really be hesitant on cutting rates, even if the economy starts to spin into a recession.
So your thoughts are, I guess, it's somewhat in line with mine in the sense that we could see another quarter. Do you think we'll continue to see more increase in rates, or do you think we'll see a pause and for a long period of time?
I'm more in the pause camp. So I think the Fed has kind of gotten to this point. They realize that these hikes have broken the banking sector in many ways. They don't want to create any more problems. We've seen so many banks go under. So many banks have been close to going under. So I'm in the camp where they're pausing, but they're going to be hard on keeping rates where they are for an extended period of time. And I don't think equity markets have priced that in at all. I think equity markets are much more on the Fed will come in and save the day as soon as things get tough mentality. And I just don't think that's going to happen.
Interesting. Well, I mean, if you could look at it from this standpoint right here, this tweet coming in, Fed's actions on Wednesday creating a large bank run. We've already started to see this with capital flight from mostly institutional money managers, as well as now I think corporate treasurers are starting to move capital into everything from money markets to gold to other aspects that get a little bit more return than what we're seeing in traditional banks, especially in the regional side. And if you kind of compare on the M2 money supply, this is going to be another one. It's like they were comparing this to, in 1992, we weren't even close. So we're currently witnessing what could be one of the biggest flights of capital since 1929. That obviously being, the day that everybody understands hits the stock market. What are your thoughts on this as far as bank, flight of capital? Do you feel that we're going to continue to see this going into the money markets?
So for me, I do see that there's going to be some continued rotation out of the banks in terms of deposits, but I do think at least the fear of losing your money in a savings or checking account is kind of now a distant memory, right? We've seen every bank that has failed so far. The Fed or the FDIC has said, hey, we'll pay out whatever the savings amount is, no matter if it's above 250 or not. So I think that aspect is gone, but I do think that there's so much dead weight on these banks, and I think there's even more to come with the commercial real estate issues that are going to pop up later this year. So to me, I'm looking at a banking sector that is going to be what I would call zombie banks, meaning that they're carrying massive amounts of unrealized losses. They don't have to actually market these losses, but they are going to only grow over time. And at some point, that's going to be another pressure cooker on the system.
Yeah. So that brings up a really good point in the sense of moving into Bitcoin. And here's my thesis on this is that even though we're getting some of a backstop to a certain extent from the FDIC, likelihood is that the problem that typically happens in these bank runs or these flights of capital are faith in the system. Once that a consumer starts to really get into a position, and I've talked to many business owners here over the past few months, that have maybe come to the first realization that they don't necessarily have the same faith in that banking system that they had this time last year. If you have business owners, next down the tier will be high net worth individuals, then you go into mom and pop businesses, and then into normal people. So if we start seeing a scale of that kind of scenario, just the mentality, perception is reality sometimes, of faith in the system, where would you see capital movement if a business or high net worth individuals say, I just don't have as much faith. I'm going to remove 50% of my capital out of traditional banks and I'm going over here. Where do you see that going?
So I do think metals. I think gold obviously is a recipient of that in some respects. I think crypto has shown glimpses of being that with Bitcoin, and early on when the banking crisis hit a couple months ago, we saw a big pop in Bitcoin. The one thing I would just point out is that recently, as early as last week, I believe it was, we saw a couple banks down close to 50%. The banking sector was looking in trouble again. There were rumors about even more bankruptcies, and Bitcoin actually fell that day. And so what that told me is that while Bitcoin at some point becomes that sort of safety, that hedge, it is still a risk asset, and people have to be careful of that. If the markets do start to dump out, I still think Bitcoin does head lower and potentially much lower.
Interesting. All right, well, let's jump to your chart then, because that's what I want to look at is as Bitcoin trades under 28K now, dipping back into its low over the past few weeks. What are your thoughts on where this heads from here?
Yeah, so the 30,500 level was just an absolutely impressive technical range on Bitcoin. And the reason why, again, that was such a wall and price had so much trouble getting through it is if you go back to 2021, just before the big run up to 65,000, you could see that low right there.
Yeah.
Then we go right over here. That mid-cycle bull market cycle low was right there and then right over here. So it made sense that Bitcoin, again, could go up into that level and then was rejected. Now, for me, I'm watching this 27,000 level super closely. Right now, we're just above it at 27,700 or so. If that breaks, that kicks off another round of selling that probably takes us to 24 to 25,000. Now, the one thing I will say, and this is something I continue to be overall still thinking this is a bear market in crypto, that this is a bear market rally. The thinking there is not only technical, meaning we haven't got through this 30,500 level, but it's also a concern based on what we're seeing in Pepe and based on some of these other speculative crypto assets. And again, you've been around a long time, Paul. When you see that type of speculation, that's not the bottom of a market, that's the top of a market. And that to me is a big issue that I hope investors really do recognize.
Well, the only thing I would say is that typically to your point, when that does happen, that euphoria stage, it's usually happening on multiple fronts. With Pepe, I wouldn't necessarily say, obviously Pepe is kind of an anomaly in the sense that we've seen, I've talked to Ran about this before over Crypto Banter. He and I have kind of gone back and forth on altcoins and whether or not these kinds of meme coins could really, even mean anything in the market other than people just going into the crypto casino and, doing their thing. But it does have an effect, though, psychologically on investors in general. But I think for the most part, at least a lot of the investors that are in our programs and things of that nature, they're pretty solid on Bitcoin, Ethereum, a handful of blue chips, whether it's Solana, Avalanche, etc. When you look at those, let's call it the feature crop of crypto that is today. Would you consider yourself bullish on those, top tier tokens, or do you feel that you're still in a bearish position for the market currently?
I think off of these levels, I'm still on a bearish position. And again, if we were to establish ourselves over that 30,500 level, I think things could change just a little bit in terms of the Bitcoin market maybe being in their bottom phase or having a bottom. But right now, I'm honestly, my biggest fear in the crypto market is twofold. One, it's that you don't have regulation yet, and the government is very. They're purposely delaying regulation to bring out the CBDC first, right? So it's the China playbook. And I know it's kind of crazy we're following China, but China outlawed Bitcoin. Then they brought forth the digital yuan, and now they're letting Bitcoin kind of come back again. Yeah. The U.S. government didn't take that's case, but what they're doing is they're not giving any clarity in regulation. They're saying, oh, it's a security, it's not, it's this and that, to the point where Coinbase has had to say, we're going to sue the SEC to figure out what the heck is what's going on here. That is on purpose so that they can launch their CBDC. And what that does is it leaves it keeps big money out of crypto right now, right? I mean, you don't have hedge funds, you don't have a lot of these bigger players feeling comfortable to invest in it until the government unveils their CBDC, and then I'm sure it'll coincide with some regulatory stuff. So for me, that's a risk. And also, I look at the stock market and I see everywhere signs of complacency. The VIX being where it is, the pattern formation is a replica of the psychology of the market chart, where just before it has a major collapse. And so if the equity markets are going to drop big, 20-30%. I have a hard time believing Bitcoin is going to hold up in that situation.
Let's talk about that, because these are risk areas within it. You look at MiCA and what happened with markets and crypto regulation there in the EU. They got, I won't call it favorable, but at least they got an alignment of where regulation was, meaning you at least know what the rules are. Now you can comply with those or not. Many companies are saying this is a huge win for crypto in the EU and broadly, maybe more across the globe in other areas outside of that. I still think that makes the US look really, really inept in terms of our ability to come to a regulation forefront. But you look over here, this coming in from CoinDesk, this is, of course, Bitcoin's a little bit of a nightmare here. Premium now on fees on Binance US. And this was something that we started tracking over the weekend, saw a huge sentiment pull on Binance, kind of out of the blue, even though I know a lot of people have been saying, hey, Binance, watch out for these kind of scenarios. And then, of course, they froze Bitcoin at that time, obviously because of the fees that were coming in on that. Do you think these have any bearing on the current price condition of Bitcoin right now at 27?
I do think so. I mean, there's definitely the more uncertainty in the market, the more it's going to create hardships for price to continue up. And I think that's the biggest thing with Bitcoin and for the rest of the crypto markets. And by the way, I mean, I know you said we're going to get to gas fees, but I'm having a hard time figuring out how Ethereum has a major future when the gas fees are as high as they are. That's a big concern of mine. I've been a big fan of Ethereum, but that needs to be figured out. And again, we can get to that in a little bit. But going back to Binance, I mean, another issue out there that is going to make investors a little bit more hesitant with putting money into cryptocurrencies, and you just have to be careful in this scenario.
Yeah, no doubt. Well, let's jump to ETH, because you're hitting it right on cue here. It's like you're reading my episode sheet here, Gareth. I love it. Total daily gas fees paid on ETH and USD around 5% of what we were experiencing back in November. Back then, around 60 mil in fees per day. Now to around 3. Kind of crazy. We're paying around $100 a transaction. This is true. Granted, I talk about this a lot in terms of ETH. I'm a big ETH fan. It's the number 2 position for me, at least in the crypto markets. And when I look at this and I think, all right, well, this is eventually going to work its way out through the evolution of bear and bull markets, that most likely you either have to lock and load, meaning hold your ETH, or you have to reposition and rebalance. The question is whether or not you're ready to move that kind of ETH into cash. What are your thoughts on how to trade ETH right now with what you're looking at on your charts?
So in terms of the chart itself, and I'll bring up my chart here so we can take a look, we're basically seeing ETH. We had that kind of blow off top right at the highs that took us to just over 2,100. And now we're kind of stuck in this range. And again, you do have a level underneath here, this upsloping trend line in this flat area around 1825 or so. On a technical basis, that is what you want to see ETH hold. If it breaks that, you head to 1,700. That breaks, you're heading down to the 1,500s. But right now, again, you're in this sideways consolidation. ETH to me looks like it's struggling. Couple things that I didn't like about the price action here. When you popped up, you had a few sideways days and then it reversed 100% of the move. Here was a nice green day, resistance, and it reversed that move right away. So it seems like right now when ETH is popping, it's getting slammed down very, very hard, which means big money is looking to unload in this range, at least for now. So I'd just be a little bit careful. I mean, those things are just standing out to me in terms of the price action. And again, just something for everyone to kind of pay attention to. Yeah, correlating to that, looking at our sentiment data on both ETH and Bitcoin, ETH showed the biggest downtrend in sentiment this week. One, actually, that is the greatest downtrend in sentiment we've seen almost for the last 45 days. So that is a little bit worrisome to me. Back to your point is
we could be looking at some people looking at a potential ejection of ETH. So we'll see how that plays out. Let's go over to Warren Buffett. He's dumping $13.3 billion in stocks. Now, some people would say this is a warning sign for risk assets. The fact is that they're going to have to put this capital to work somewhere for the aspect of Berkshire Hathaway. But you look at their faith, one, in the banking sector, some of the tech stocks that they hold, Apple being one of the biggest. Is there any group within the security side of what's happening with Berkshire Hathaway that you look at and say, all right, these are the areas I would really stay away from. This would be a repositioning or rebalancing of my portfolio?
Yeah, I mean, a couple things stood out from their big meeting over the last weekend. One was that they had no interest in getting into any of the banks, and I thought that was interesting because we think about some of where these regionals are trading, how discounted they look, and for Warren Buffett to not even be flinching at it and not even have any interest is very telling to me in terms of what he's seeing for the financial future of these banks and the financial system. So that kind of caught my attention because again, he was the one when during the Great Recession, he jumped into a bunch of the banks at these lows, like Goldman Sachs. He got the sweetest of deals and he was willing to do it back then. He's not willing to replay that this time. So I think that's something us as investors have to take into account. In terms of other areas of interest, it's hard to pinpoint what he'd be into, but I could see, biotech is kind of an interesting area if you're looking for kind of the safety of quality that pays a dividend like an Amgen or something like that. Those type of stocks, I could see him potentially putting money to work in.
What about metals? Do you feel like this is a direction for a lot of traders right now as they start to weather the potential of a securities adjustment here from the S&P? Gold has been holding a fairly good position at an all-time high. What are your thoughts on gold and silver?
I continue to be a huge bull on gold. Silver I am as well, but a longer term horizon because of the industrial side of it. And if we do slip into a recession, like I do expect in the second half of the year, then silver may struggle a little bit compared to gold. Yeah. But gold to me just continues to be the no-brainer. If panic is in the markets, gold is the place to go. If inflation stays high because jobs are doing well and everything like that, gold likely does well with inflation high as well. So to me, it just continues to go higher. I have an end of year price target of 2,300, and I do think it is achievable very easily by year end. Here we are at all-time highs, or basically just under all-time highs. It's been a remarkable run on gold. I still remember in 2021, the Bitcoiners just trouncing gold, saying it was dead. And it's just like, man, when you hear that, you got to go the opposite way on everything. Yep.
Yeah. Do you look at more on the ETF side, the minor stocks? How do you balance that in terms of a portfolio?
Yeah, so for me, it's the gold usually bought through the ETF, like the GLD or something. That to me is more kind of the base of my portfolio, where it's not going to get too crazy. I'm not going to lose a lot. I'm not going to make 100% on it, obviously, in a very short amount of time. The miners are much more the volatile players, right? They suffered in 2022 because inflation was high and gold's price was not keeping up with that. So as they're mining, their input costs were up high and gold was not able to be sold at a higher level as well. Now it's reversing. Now inflation is coming down and the miners costs are coming down and gold is actually starting to take off. So I think if you're aggressive, the miners are the place to be. If you're more conservative, then obviously stick with the metal itself.
All right, so I wanted to look at a couple of things here on Buffett. So he jumped in Q3. He opened up his new top 10 position in TSM, which is the semiconductor manufacturer. We've actually talked about them before. He also went into Chevron, which I thought was kind of interesting, trading up right now on the day, but look at the 5-day, a little bit of movement. You go into the 6-month. Why is this a position? Do you feel like just the energy stocks are a potential more resilient position during a recession? Is that why he's going this direction?
Yeah, I think for him at least, it's kind of the safer play. We have Chevron off of the highs. Energy, even in a recession, there's still a need for it, obviously, although demand will come down. I think he's probably also banking on OPEC saying, hey, listen, we don't want oil to go below X dollars, and then potentially continuing to make cuts even in a recession, and which obviously benefits Chevron, Exxon, and some of these other ones. I personally don't like the chart. I mean, if I can flip up my chart real quick here, take a look at this, guys. So you have almost like a head and shoulders here. Shoulder, head, and shoulder. And that to me, I mean, it hasn't broken yet, but if this level breaks at 155 or so, this is going to tick down pretty heavily, probably to about $133, which is a significant drop. So again, the chart to me doesn't confirm what he's seeing, but remember, Warren Buffett is a much longer term investor than I am. I'm much more shorter term. What's going to happen in the next week, 2 months, whatever. He's much more longer term, get those dividends in over the next 5-10 years. And ultimately, I'm sure in the next 5-10 years, he'll do very, very well.
Last few points here I want to hit on is a couple of things. You've got the U.S. possibly like 3 weeks away from a default. I don't think this is going to happen. They're going to raise the debt ceiling. But it does kind of give the U.S. An interesting proposition, perception-wise, to the rest of the global economy around the world.
Yeah.
Do you think this has any bearing on how Wall Street is going to respond over the next, say, 30 to 60 days going into the summer?
Yeah, so I agree with you that eventually there'll be some sort of extension on the debt ceiling. I do think this situation, and again, it seems as politics become crazier and crazier, the risks of some hard-nosed or hard-headed politicians does increase the risk of a default, but I still think something gets done because no one wants to be viewed as the person that stood behind the default in the U.S. So I agree with you. Eventually, something does get done. But for me, it's more looking out and saying, okay, well, what are the risks now? The Fed may be pausing right now. Markets and investors say this is great, but again, if they're not going to cut and interest rates are going to stay up high, I see trouble in the second half of the year. Again, I'm pricing in, believe it or not, a 20% drop in the S&P by year end. So you only got about 6-7 months left on that or so. And again, I do think it does catch up to us in the second half of the year. Interesting.
Okay. Last point is short selling got banned, obviously because of the bank crisis here. So this changes a little bit. We saw this in 2008. I was talking to Greg Foss about this just yesterday around short selling and what this might play out. Does this protect the banks, and does it cause any kind of ripple effect into shoring up these regional bank positions, at least from a, we'll call it retail banking position, businesses, high net worth individuals, et cetera? What are your thoughts?
So to me, the only positive for banning short selling in the banks is that it keeps the aggressive, where one hedge fund just pounds a stock or a bank stock with continual, like, nonstop shorts to try to create panic. That's what it stops. It doesn't stop these things from going down. What we learned in 07, 08, 09 is that when they ban short selling, stocks still go down. A healthy, and this is what I strive to get this across to investors, is that a healthy market has shorts and longs, right? When you get rid of the shorts and selling is occurring from longs, the shorts, when there are allowed to be shorts, they're the ones that are covering their shorts and actually giving the market bounces because, again, they're covering, which is forced buying. So they're buying stock to cover their shorts. So it's actually a very healthy thing to have shorts because they'll be covering when something dips, which then causes the bounce in stocks. When you ban it, essentially, if no one can short it, what you're going to do is have sellers, and then who's going to be buying on the other side? It does limit it, and historically, banning short selling has not worked well.
Yeah, very, very interesting for sure. Listen, if you guys are interested in learning more about Gareth, you got to visit this right here, which is Verified Investing Education. We're going to leave a link down below. You can actually use our link, let them know where you came from, and give him a shout out. He's got a great course over there on his trading series. So, Gareth, always fun to talk to you for sure. Last up is our poll, which I know you always love to go back and forth on the poll. Let's take a look. All right, sell in May, go away. What do you think here? We got no, 55%. What are your thoughts on that one, Gareth? This being the old Bitcoin adage, sell in May, go away.
So I am, second half of the year, I think, is going to be very tricky. So if you're an only buyer in the market, if you're not someone that shorts, yes, sell in May and go away. I'll go anti the crowd here.
I love it. Always fun. Gareth, thanks so much for catching us today. We appreciate your time.
Thank you, Paul. Have a great one.
You bet. All right. So you guys are tuned in over on our podcast side of things, maybe. If you're listening to this on the post live, the first thing you got to do is jump over to our YouTube channel and subscribe. Subscribe to the channel and click that little bell icon, because it's going to give you notifications when we do live shows like this one right here, where you get a lot of insight data from traders like Gareth and many other analysts and Bitcoiners, as well as Web3 guys. We do it all here. And it helps you, I think, in a way of really trying to navigate what's happening from a macroeconomic standpoint, but more importantly, how the markets are starting to shift around this. And I think that's the bigger play that has to be done. And you got to catch those via live. So make sure and subscribe to the channel. And last up, make sure and share this video. This is one of the biggest ways that people learn about crypto, Bitcoin, Ethereum, no matter what you're into. If you're a Bitcoiner, if you're an ETH bull, if you're a metaverse guy, it doesn't really matter. The idea is that you're sharing information that hopefully is getting to others that might be interested in the same thing you are. So make sure and do that for us. Of course, if you want to reach me, it's out there on Twitter, @Paul Barron. We'll catch you next time right here on TechBath.